All right, so welcome to Brainbox Notion.
Yeah,
Our training session today is going to be on construction project valuation, the QS guide for financial control, from pre-contract estimate to final account. So before we begin, we would like a brief introduction on your your brief background before we proceed. We made the right choice by picking this course on valuation because as a quantity surveyor, valuation is part of your job which is required for any project. So there's no construction project that you execute, a government recognized project or any individually recognized project that you can execute it without valuation because it's all about money and execution. You need to know what you are spending, why you are spending it, and what you are spending it on. So those are the key things that each project needs to recognize. Your spending. It is very, very important. It is not all about the design. The design is okay when the design has been done and the contract kick off. So what is going to be the main challenge and the main area of concern is going to be the valuation. So the quantity surveyor take higher control over the project in post-contract areas. So that is why it is very essential and it is very good to have knowledge on valuation as a quantity surveyor. So before we proceed, let's start with our learning objectives. Let's look at our learning objectives. So firstly, we have to define the role and importance of valuation at each stage, at each project stage. We need to know the role and importance of valuation at each stage. Then secondly, we are going to understand the key contractual valuation mechanisms because valuation is a key contractual asset that needs careful analysis. So thirdly, we are going to look at preparation and verification of interim payment application. So how to prepare and verify any interim payment, which is valuation, interim payment certificate. We sometimes, in some regions, they call it IPC, some call it IPV, interim certificate valuation, IPC, interim certificate payment. So fourth, we are going to calculate and defend variation and claims. So what are variations and what are claims? So the moment you are working on a project that has to do with valuation as a quantity surveyor, you are going to deal with these two things. You are going to deal with variations. You are also going to deal with claims. So we are going to look at the difference between variation and claims. So thirdly and final, we are going to see how to navigate the processes of a successful final account. Because after you have finished preparing all your evaluations, you need to prepare a final account. So that is why on every project, the quantity surveyor is the last engineer to leave the site because when the project kickstarts, you have the structural engineer, you have the electrical engineer, you have the mechanical, you have the architect, and so on. But as time goes on, the moment all electrical works are being done, the electrical engineer will be kept aside. And also, when the mechanical works are completed, the mechanical engineer will be aside. And also, the structural engineer, too. Whenever the civil works are done, he will also be aside. So, what the two people that will remain is the architect and the quantity surveyor. So after the final delivery of the project, of the entire project, the architect too will be kept aside. So the quantity surveyor is the last man standing on every project because after the successful completion, you need to submit final account. And that final account is the last document that will be submitted to the client before uh, everything is handed over. So that is why it is very, very important to learn how to manage project and how to do evaluation. So these are going to be our learning objectives for this training session. So let's look at the modules because you need a structure on where to start and where you are heading. So looking at the modules, we have 5 modules for the training session. Which one? We are going to look at the principles of construction valuation, because we have different type of valuation. We have valuation which the estate surveyors do prepare, and we have the construction valuation, which is the one that the quantity surveyor prepares. So this is a construction valuation training session, not an estate valuation training session. So there are two different things. So we are going to look at only construction valuation training session, which is part of the QS job. So secondly, we are going to also look at pre-contract valuation, budget and tender. So we have pre-contract and post-contract. So in the pre-contract, we have the budget and tender. While in the third module, which we are going to look at the post-contract valuation, which is the life cycle of a payment. So the first valuation is the pre-contract, the budget and tender, and the second one is the post-contract, which is the life cycle of payment. So mostly people do where people do manage post-contract. Not all quantity surveyors knows how to manage the pre-contract, because the pre-contract mostly in an organization, it is managed by the senior quantity surveyors. So it is mostly the middle ones, which are the middle quantity surveyors do handle some of the post-contract valuation, because the pre-contract is a very key issue whereby the senior management usually do handle that. So people have a little or less knowledge on the pre-contract valuation, but in this course we are going to also look at that. Then the fourth one, we are going to look at valuing change. So this change are variation and claims, which are very, very important in a project. We look at the variations, we also look at claims, because as you are working with valuation, you have to deal with these two things, the variation and claims. How do you handle them? How do you handle claim? How do you handle variations in a project? So they have a specific way to handle. So you need to know how to handle such things. So the final is the module 5. We have the final account, which is the closing of financial loop, because it is a loop. So the closing of financial loop, which is the final account. So at the end, we are going to have a case study and practical exercise, which you are going to do that. We are going to give you a bill of quantity and some rules, and also some information whereby you are going to prepare a valuation based on the information given. We'll give you the monthly schedule, the amount being paid, the status of the project, and so on. So that is going to be our case study and also a practical exercise. And after that, we'll wrap up for the Q&A. Before then, you will be awarded your own certificate for this training session. So once again, welcome to Brainbox Notion. So let's proceed. Hope you are with me. I'm communicating, right? All right. So module 1. So today's session is going to be more of introduction, like I said earlier, because valuation, apart from the financial calculations and so on, understanding the concept is a key. Just like estimating, you can't perform any estimate without understanding the construction technology. So same as valuation, you need to understand how it is done, what to do, and how to do it before you start application. Not just moving into the calculations without understanding what to do, how to do it, and when to do it. So that is very important. So module 1, what is valuation in construction? It is not just money. It is the systematic assessment of the value of work executed. It is also a tool for financial control and forecasting. It is a contractual requirement for payment. Without valuation, no payment will be given to any contractor during a construction project. And for the QS, it is the QS mantra. get paid for what you have done fairly and on time. So valuation needs to be transparent. So as a quantity surveyor, your ethics matters, how you handle your project. So you need to be fair in your dealings, you need to be fair to the client, and you also need to be fair to the contractor. So not because, okay, I'm representing the client, whatever I'm going to do, or all my judgments are going to be on the client side, or I'm a contractor quantity surveyor, I'm going to, all my attention, all my things are going to be based on the benefit on the contractor. So that is not right and not ethical. And according to construction laws and rules, it is also not right. Even if you are a quantity surveyor, a client quantity surveyor, or a contractor quantity surveyor, you need to be fair in your dealings. You need to be fair to both parties, both the client and the contractor. So the key contractual pillars for valuation. What are the key contractual pillars for valuation? The contract is a king. Everything stems from the signed agreement. So that is why, as a quantity surveyor, we do law in your school. I know you also do law in your school, because a quantity surveyor is the lawyer of the construction industry. That is why we handle most of the arbitrations and other related claims during construction. It is when the problem escalates to a certain level, that is when the law firm will be involved. But if it is in a middle crisis, the quantity surveyor will be the one that will handle such time. So you are also a lawyer within the construction industry. So everything starts from the signed agreement. That is why it is very important, before you prepare any valuation, you need to know the contract agreement. What is the condition of contract? Very, very important. You need the contract document. What is the condition of contract? What has been set aside? What type of contract is that, before you move on preparing your own valuation, because that will determine the type of the valuation you need to prepare, how you need to prepare it, and when you need to prepare it. So those things determine when to prepare valuation, how to prepare it, and also a lot of things. So secondly, we have the key clauses to know. One, for interim payment, we have JCT, we have FIDIC, we have a lot of contract document. So you need to know the key clauses that covers interim payment, final account, variation, and claims. So those are very, very important. Which construction document are you using? Are you using JCT or FIDIC? No, depending on regions, most countries have their own contract agreement they usually use for their own country. So they have the mostly used one, and they have the ones that they do use based on the condition of contract. Because sometimes, depending on the contract agreement, that will determine the type of construction document to use, whether JCT or FIDIC. So it also determines. So which one is for your region? I think JCT is globally used. FIDIC is also globally used. Then the next, we have variation and compensation event, which we are also going to talk details on that. Then we have claims, which are prolongation and disruptions. Then we have retention. So for retention, this is an amount of money which will be which will be held on each payment, depending on the agreement also, which will be used after the completion of the contract. It will be retained for any issue that might arise after completion, for repairs and so on. But if you successfully completed the contract, due to the contract agreement, it might be from 6 months, mostly from 6 months, depending on the agreement. So your retention will be released to you. But if there is any default within that 6-month period, so the client might use the money from the retention to make those repairs, or the contractor can use his own money to make those repairs, which he is going to be paid his retention complete. Then finally, we have the final account and defect liability period. So the final account is, like I said earlier, is the document that you need to submit at the end of the project. Then the defect liability is the period whereby if any changes occur, the contractor still has fault and still has the ability to be engaged to make all those repairs. So that is that for module 1. So looking at the module 2, which is the pre-contract valuation. So what is the purpose of this? The purpose of pre-contract valuation is to establish baseline value, the contract sum, 1. So the key documents that have been prepared in this pre-contract are the bill of quantity, which is the primary pricing document. We have the activity schedule, price list of activities. We have the tender sum analysis, and the QS role in this is ensuring the tender is accurate, complete, and commercially viable. So I know you know how to prepare bill of quantity, but
Yes.
for the sake of this course, we are going to open a sample bill of quantity and also a sample contract agreement for you to see. So for the post-contract, which is going to be our main concern here, because the pre-contract valuation is mostly preparation of bill of quantity and also tender sum analysis. Do you know how to do tender analysis? You are perfect. You are okay. You know how to prepare tender analysis. Did you know the process of tendering? So looking at the post-contract valuation, the payment cycle, which is the heartbeat of project cash flow. Without the valuation during the post-contract, you can't have any payment. So the standard cycle, which is assessment date and valuation date. Application for payment, which is prepared by the contractor quantity surveyor. So after the contractor quantity surveyor sends the application for payment, the consultant quantity surveyor will now look at it, verify, and then do a joint assessment. After that, they will now arrive at a certain amount to be paid for that month, which then next we have the payment certificate, which is also issued by the client QS, then the due date and the final date. So each of these payments and assessment have their own due date. So due to the contract agreement, it might be 14 days, it might be 15 days, depending on the contract agreement, which a client needs to issue payment certificate to the contractor. Only if maybe there is issue whereby he's unable to do that, or there is some verifications they need to do whereby it will lead to some extra time for him to release the payment certificate. Because if the payment are not released on time, according to some of the contract, the contractor can request for damages. He can claim for damages for not paying him on time, and he can also claim for extension of time, because untimely payments can also affect the duration of contract. So it is very, very essential to know when to pay the contractor. So next is what goes into an interim valuation. So we need to look at what it entails. What goes into an interim valuation? So 1, we have work executed on site. 1, you have your contract, the project is ongoing, so what has been executed on site? That goes into the interim valuation. Then secondly, measured work from BOQ/specification. That also goes into valuation. Work executed against activity schedule. So when you have work that has been executed against activity schedule, can also go into your valuation. We have the materials on site. It must be listed, agreed, and protected. So sometimes we have material on site and we have material off site.
Offsite.
So there are two different things. When you have material off site, you need to have a written agreement whereby that store or wherever you store that materials are yours. Number one, you will have an agreed written document to the client that this belongs to you and this was purchased for the sake of that project. And the client need to have a full access to those materials offsite, whereby whenever the client feels like moving those materials, he has the ability to move those materials. So there are some situations whereby you can see some contractors do use materials offsite. Sometimes they use materials on site to trick the clients. You will see that a contractor will brought materials to the site. Let's say, for example, cement. At the end of the month, you bring in cement to the site. They are going to be valued as part of the valuation. After they have been valued as part of the valuation, in a few days, the contractor might send in a truck, pack his materials, and then move it offsite or move it to another construction site again for valuation. So this happens globally, whereby contractors do use that trick to trick the client, which is very unethical and wrong. So whatever you are trying to do, you should be ethical within your practice. So the second, we have the variation, which is approved changes to the scope. So variation also moves into the interim payment. Then we have the fluctuation. So the fluctuation is price adjustment, whereby there is increase in prices of materials or decrease in prices of materials. So it depends on the contract agreement. In some fixed contracts, whereby the contract is fixed, whether there is increase or decrease, the client has no issue unless on a ex gratia area. So if there is ex gratia whereby the client might reason, okay, the condition is very critical and it is going to affect the contractor way bad, so he can chip in within ex gratia area and then help the contractor with some funds to purchase some of those materials whereby the actual contract sum cannot purchase them or cannot cover all of that. Then we have the deductions, which we do within preparation of interim valuation. So in that deductions, we have the retention, which mostly 3% or 5% held back, depending on the contract agreement. So within 3% or 5%. Then we have the defect and snagging. So the defects are also issues whereby they need to be corrected, and the snagging are mostly done after the project has been completed. So the construction team will move around the site to confirm and check all instruments. So those that are not properly fixed, they will be noted as snags for the contractor to fix, or those that are not fixed properly will also be adjusted, or those that are not working will also be noted as snags for the contractor to fix before the final handing over. So it is mostly done within a week or 2 weeks before handing over. So the contractor, depending on the contract, will be given a week or 2 weeks to fix all snags before the final handing over. Then lastly on this, we have the advance payment, which is repayment. So advance payment also goes into interim valuation. So also depending on the contract, the client might give the contractor an advance payment to begin work. In some cases, the contractor is going to use his own money to execute the work. Maybe it's a contract that has been agreed based on some milestone. So if he uses money, maybe the milestone is substructure or trench excavation or superstructure. So the moment the contractor execute the work, up to that milestone, which is substructure, depending on the agreement. So valuation is going to be prepared to pay the contractor that agreed money for that certain project. But in some cases whereby advance payment is given, so he's going to use the advance payment to execute those works. So after valuation, they are going to pay him and also deduct advance payment. So mostly it's after 3 to 4 interim valuation before the advance payment usually is being deducted. But sometimes it can be deducted in the first valuation. So also depends on the contract. So not really, it has to be so period. So it's being deducted based on the contract agreement. So that is why as a quantity surveyor, you need to know your JCT or FIDIC or any of the contractual documents. So it is going to be your guide on all the payments and also issues that relate to valuation and interim certificates. So before we move to the practical session, let's also look at common valuation methods for work executed. So one, we have the remeasurement BOQ contract, which is value as built.